Hi there, welcome to Kneppy Invest. Is the bear market almost over? And this is a fairly important question, unless you believe that you can't time the market, it's time in the market. I don't necessarily agree with that. There are reasons I don't agree with that. One of the reasons I don't agree with that is even though you can't exactly time the bottom and the top of the market, I'm saying within a day or maybe even within a week, you can time when sentiment starts to shift. And the movement in the markets is all about sentiment. So when there is a bear market, sentiment is pessimistic and pretty low. And when we're in bull markets, pessimism is fairly high. So you can actually judge when that sentiment does start to shift around. So even though you can't time the exact bottom, you can time roughly when the markets do turn around. So I do believe you can take advantage of that. But there are also other signs I am looking for apart from sentiment. So for instance, I'm looking at when interest rates start go down, or maybe we stop to see, or we start to see the end of this rising interest rate cycle. And if we start to see interest rates start to fall, in fact, that could be bad news for the overall economy, but that could be a sign that the bear market is starting to come to an end. Other things I'm looking for is if we officially go into recession, I think that would be a sign the market is nearing a bottom and the bear market is almost coming to a completion. Maximum pessimism. If people are telling you it's absolutely foolish to go into the stock market, it's too risky, that's a pretty good sign that we are nearing the bottom of the market. And psychology. So this comes back to sentiment. And when it comes to psychology and sentiment, I do look at charts. And what happened on the Nasdaq and the S&P 500 on 13th of October was really interesting. In particular, the intraday swing we saw in those markets. And that may be a sign, I'm just saying here, may be a sign the bear market is almost over. So let's talk about that during the rest of this video. In this particular video, I'm going to focus mostly on the Nasdaq and the S&P 500. Actually, not mostly, completely on the Nasdaq and the S&P 500. Mostly the Nasdaq, a little bit on the S&P 500. So right now, this is the Nasdaq going back to the start of 2022. Just before the beginning of this particular calendar year, the Nasdaq did reach its particular high, and the Nasdaq is in a well-defined downtrend right now, a well-defined bear market, and it's trending lower. We have seen these rallies during this bear market, and every single bear market we see rallies. The last bear market rally we saw back in July and August, there were some commentators out there who thinking this was the start of a new bull market, but this was a classic bear market rally. So what I have got here in this particular chart are two lines, two dashed lines. One dashed line is sloping down, and that is the trend in the Nasdaq. And whenever we get to the top of this trend, which we have seen twice in the past 7 or 8 months, we see the Nasdaq start to fall. So well-defined downtrend. And if I see this downtrend broken, that would be a good technical signal that the Nasdaq is, or the Nasdaq's downtrend has come to a completion, and maybe the bear market has come to a completion. The other trend line, the dash line I have here is the horizontal dash line, and that was a support level. So we saw that support level reached in June, and we saw that nice little bear market rally. And then about 5 days ago, 5 trading days ago, this particular support level was broken right on 11,000. And then on the 13th of October, a really interesting trading day on the Nasdaq, we saw a massive intraday swing. So the Nasdaq opened lower about 3% and then actually finished 2% higher. And it was really interesting. On that day, we saw the Nasdaq reach its high towards the end of trading, and it finished right on that support level that has now become resistance because it was broken 3 previous trading days ago. And then on the 14th of October, the Nasdaq actually opened 0.8% higher above that resistance level. So potentially that resistance level was going to be broken, but the Nasdaq fell during the rest of trading on that day and was actually finished quite a bit lower than that resistance low at around about 10,700. So that resistance level is still in play, has not been broken. So that is a little bit of a bearish sign moving forward that there possibly will be some further downside in the future for the Nasdaq. What is really interesting about bear markets is just the volatility. You're going to see a lot more volatility in bear markets than what you'll see in bull markets. It's just the natural state of things because, again, bear markets are much more unusual than bull markets. And bull markets tend to happen over a long period of time. So it could happen for a 10-year period. Bear markets tend to happen during a much shorter period of time. They could last a few months, 6 months, 12 months. More than likely, it's going to be like 12 to 18 months. The tech bubble burst back in 2000, 2002 lasted for just over 2 years. So they don't last very long, and it's not the usual state of affairs for the equity markets. Equity markets tend to go up during time, and when they go down, there's going to be a lot more volatility because the further the indices go or the equity markets drop, you're going to see more people out there thinking, well, there's way more value. And so you're going to see these very large up days and very large down days. In particular, bear markets happen around uncertainty in the economy. And so you're going to get some bad news occurring, say higher than expected inflation, and the NASDAQ might drop 3.2% on open. And that's exactly what the NASDAQ did on the 13th of October. It dropped 3.2% on open because the inflation figures were higher than expected. But for some reason, and I do have an hypothesis behind this, some reason the NASDAQ rallied during the rest of the day and closed 2.3% higher. It was one of the largest intraday swings we have seen on the NASDAQ, and I'll talk about this later in this video. But this volatility continued into the next day, the 14th of October. In fact, the NASDAQ actually opened up 0.8% on the 14th, but then selling came in, and by the end of trading on the 14th, the NASDAQ was actually down 3.1%. So a lot of volatility, big intraday swings, not only on the 13th, but also on the 14th. A few days ago, I was actually watching a podcast, AusBiz The Core. I'm about 1 month behind at this particular point in time, which actually is working quite well because I can see these commentators put forward these companies, and then I can see the share price action over the past month once they've either said it's a buy or a sell. Anyway, in this particular episode, someone mentioned that the ratio of puts to calls was about 5 to 1. That is really unusual. So when I heard or watched that video, I thought maybe that is the reason we saw this large intraday swing. There was short covering and put selling. And then I saw this tweet from this Bloomberg article, and they actually mentioned this in this particular article. It's a combination of short covering, put selling. It's a very well hedged event. It's trading like event past. Sell your hedges, contributing to market rally. So maybe that is the reason why there was this large intraday swing in the NASDAQ and S&P 500. There could be some other reasons, but at this point in time, I think this is the most logical reason why we saw that swing. My main motivation or inspiration for doing this video today was this particular tweet from Sentiment Trader, released just after this large intraday swing. And they just mentioned how this compares to historical intraday swings, and it is comparable. In fact, today was the 5th largest intraday reversal from a low in the history of the S&P 500, and it was the 4th largest in the history of the NASDAQ composite. But it's really interesting when you look at the other dates here in these particular tables, particularly the NASDAQ. If you exclude the 13th of October 2022, all the other dates revolve around significant bear markets in 2008 and in 2001 and 2002. We all know what happened in 2008. That was the GFC. And in 2001, 2002, that was the tech bubble burst. And even the S&P 500, there were some other dates there, including 1987. And we know what happened in October 1987. If you don't, that was a pretty large, quick crash. 1962, I don't know not much about, but we also get 2008 and 2002 here. In fact, 2008 occurs about 3 times it. So what I thought I'd do is go back to look at these particular dates and when they happened in the bear market. Do these particular large intraday swings happen towards the start of the bear market or towards the end? And if we get a particular scenario happening frequently, maybe this could be a sign that we are nearing the bottom of the market, particularly if most of these large intraday swings occur near the bottom of the market. So I tested that hypothesis, and you'll see the results, not the exact results, I did no numbers, in the next few slides. First of all, let's go back to 2008 and 2009. And this is the NASDAQ, or the NDX, going from about June 2008 all the way through to about May 2009. What's really interesting, so I haven't really focused on the NDX or the NASDAQ during the GFC all that often, but it's really interesting to see there is a bit of a double bottom here. So the first bottom in this particular double bottom was in November, and that was actually the low in the NASDAQ during the GFC, which is really interesting because I've always known as the low being in March 2009, but the second bottom was March 2009. But when we look at this S&P 500, the definite bottom was March 2009, but a little technical signal that around about 1,025 for the NASDAQ was the bottom because of this double bottom, and double bottoms are technical signals. But it's really interesting when we see those large intraday swings in 2008, they all occurred within 2 months of that first double bottom. The first one was 18th of September, second one was the 16th of October, third one was the 13th of November, and the last one was the 21st of November, which was right on the bottom of the GFC. So just looking at this, 4 occasions happened within 2 months of the bottom of the GFC. So this got me really interested to explore the possibilities that these large intraday swings happen towards the end of the bear market. That got me excited because maybe the 13th of October 2022 could be a sign we are nearing the bottom of this particular bear market. So let's explore this a little bit further. Let's have a look at the S&P 500 in 2008, in 2009, and then also look at the NASDAQ in 2000 to 2002. So I got excited when I saw the NASDAQ and those large intraday swings happened right near the bottom of the market. Do we see the same thing when we look at the S&P 500? And this is the S&P 500 from the end of 2007 towards April 2009. So the whole bear market here, almost the whole bear market. But unfortunately, the whole reason I had to go back that far to the end of 2007 is because the first large intraday swing actually happened on the 23rd of January 2008. And that is near the start of the bear market, not near the bottom of the bear market or the end of the bear market. The other 2 dates where we saw large intraday swings in the S&P 500 were on the 16th and 18th of October, and that is still not towards the end of the bear market. Still had about 6 months to go to the bottom of the GFC, which happened around about 675. So those large 2 intraday swings were around about 1,200. So still a lot more to fall in the S&P 500 before we got to the bottom. So even though the NASDAQ seems like maybe it is a signal, there's large intraday swings, when you look at the S&P 500, that signal is significantly less clear. In fact, it's not there. Now, just because we didn't get a signal in the S&P 500 doesn't mean the story ends there. Let's focus on the NASDAQ because we did get a signal in the NASDAQ in 2008. So let's go back to the tech bubble burst, which was a period of time from the start of 2000 all the way through to the end of 2002. This was a long bear market, lasted more than 2 years. In fact, the NASDAQ fell from 4,800 to 800. That is a significant drop in any sort of index. And the top of the NASDAQ was the 24th of March 2000, and the bottom was around about October of 2002. I've already mentioned you're going to see a lot of volatility. You're going to see a lot of really good updates, particularly towards the start of the bear market. And this was true for the NASDAQ. We saw some epic days, epic up days in the NASDAQ in 2000. There were 2 days in May and June where the NASDAQ was up 10%. And there was 1 day towards the end of 2000 when the NASDAQ was up 18% in 1 day. Yes, 18% in 1 day. No doubt there would have been some investors out there who thought this was the start of a rally in the NASDAQ, maybe the start of a new bull market. That's why the NASDAQ rallied on these particular days, because of excitement. And that excitement starts to wane a day as the NASDAQ drops and drops and drops. So let's just focus on those 3, or actually it was 5 large intraday swings in this period of time. Notice they're all bunched together. We saw 2 in March 2001, then nothing, and then we saw 3 in July 2002. So that July 2022 is wrong. That should be 2002. You also notice when we looked at the NASDAQ in 2008, they all bunched together towards the end of the bear market. But when you look at the S&P 500, they were not bunched together, apart from those 2 days in October 2008. So that was sort of in line with the S&P 500, but we had that 1 day in January 2008. But if you focus on the March 2001, those 2 dates, they were not towards the end of the bear market. They were sort of, in fact, we had still 18 months to go before the end of the bear market. But the majority of the fall in the bear market had come to a completion by that point in time. In fact, the NASDAQ had dropped from 4,800 to roughly between about 2,000 and 1,500 when we saw those 2 large intraday swings. But we still had a lot more to fall in the NASDAQ from there. So that was not a signal that we were near the bottom of the bear market. But in July 2002, we definitely saw a signal there. So we only had a few more months to go before we saw the bottom of the bear market. And don't forget, we had 3 days, 3 large intraday swing days in July 2002. So maybe based off this, there is a potential sign we are nearing the bottom of the market if we see a bunch of these large intraday swings. I think we need to focus on that because we saw that happen in the NASDAQ in July 2002 and also the NASDAQ in that period between September and November 2008, we saw a bunch of these large intraday swings. If we look at the S&P 500 and sort of exclude that 1 day in January 2001 and exclude those 2 dates in March 2001, if we get more than 3 large intraday swings within a few months, that could be a sign we are nearing the bottom of the market. To make my point a little bit clearer, particularly if you don't understand, what I've done here is just looked at the weekly NASDAQ over a 10-year period from the end of 1999 to 2009, and I've included those 2 bear markets, the GFC and the tech bubble burst. And you notice here, the tech bubble burst was significantly, well, I was going to say more significant than the GFC by a large margin. But when you look at these large intraday swings and when they occur in the NASDAQ, they tend to happen towards the end of the bear market. So we had those 4 instances between September and November 2008. And again, that was near the bottom of that particular bear market. And then July 2002, they occurred near the bottom of the bear market. Not right on the bottom of the bear market, but near the bottom of the bear market. The only instance we did see a large intraday swing that was a signal of the bottom of the bear market was November 2008. But we did have those 2 days in March 2001. So what I'm suggesting is if you do get 3 large intraday swings happening in a short period of time, not sure exactly what short period of time would actually mean, then maybe that is a sign we are nearing the bottom of the market. So I'm going to wait to see if we get more large intraday swings. And if we do see, say, 2 more large intraday swings in the next 2 months, I would be getting quite excited. Maybe this is a one-off, what we saw on the 13th of October. Maybe we will see more. So at this point in time, just wait and see. That's all I have for this video, focusing on the question, is the bear market almost over? And even though we don't have definitive signals right now, I am looking for signs that the bear market is coming to a completion. And even though we did have that large intraday swings, and historically, and even though we do have a small sample size, historically, the bunching of these large intraday swings occur near the end of a bear market. So if we do see more large intraday swings over the next few months, that could be a sign we are nearing the end of this particular bear market. If you have any questions, I'd love to hear them, any thoughts, any comments, any concerns, leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.